Advantages and disadvantages of buying an investment property. Buying an investment property is a popular asset to own. Both new and experienced investors often have similar reasons why they wish to purchase. There are many advantages and disadvantages. Here we discuss and summarise them. Advantages of purchasing an investment property. The property market is generally more stable than other investment markets such as the share market. It is a tangible asset. You can drive past and look at that asset at any point in time. You have good control over when you want to buy or sell. You can also rent it to a tenant of your choice. An investment property generates a monthly income through rent. This is generally a fixed income when tenanted. The property value will increase over time, offering you capital growth. The better the location, the better the capital growth. An investment property is entitled to many tax benefits. These include tax depreciation, property expenses such as maintenance, council rates, and even property management fees, to name a few. The interest charged on the investment loans are also generally tax deductible. Investors can use these tax deductions to pay less personal tax. Most property investors borrow funds to purchase an investment property. If the investor is entitled to borrowing money, banks will be more inclined to provide a substantial level of funds compared to buying other assets in other investment markets. As the property investment grows in value, you may also be entitled to some equity to further invest. The equity doesn't have to be only invested in real estate, but it would be secured to the investment property that you're borrowing against. Disadvantages of purchasing an investment property. The initial cost to buy and sell an investment property is higher than other assets. Selling an investment property takes longer. This is particularly the case if it's still tenanted. Some buyers may be interested to own and occupy the property rather than continue leasing it out. Rent is only received when it's tenanted. It can take time to lease, which may result into no income for a certain period of time. Sourcing a tenant costs money, while the cost of a property manager will then reduce your rental income. The property market generally increases over the longer term, but it can experience a drop in value at different intervals. If you have borrowed funds, this may amplify those fluctuations. As it requires a lot of capital or money, it is difficult to diversify into other investment markets. This is because it often leaves little money left over to buy something else. So what should I do? Buying an investment property has a proven track record to providing good returns in both income and growth over the longer term. It is an asset class that is tangible, which provides better stability than most other investment markets. If you can afford to buy an investment property, it can be a rewarding experience. Before proceeding, it is important to note it doesn't come without risk. It also requires a substantial commitment, particularly if a loan is involved. It is ideal to obtain advice from a panel of professionals. An accountant will help you understand the tax benefits. A mortgage broker will explain the interest costs and repayments. And a financial planner will be able to help establish a budget to ensure that you can implement the strategy while enjoying your livelihood. If you'd like to talk more about your investment objectives, please don't hesitate to contact us. We specialise in sourcing brand new and off-the-plan properties. You can contact us at info@crestproperty.net.au or visit our website at www.crestproperty.net.au. Thanks for listening.